Welcome, everybody. My name is Michael Kamel. I'm here with my good friend JR Romero. I forgot to start the countdown, so we are just live right away, ready to party. Nvidia earnings were monstrous yesterday, and now it is time to talk about the aftermath. So, of course, I have my buddy JR Romero with me. JR, how are you doing today?
I'm doing great, Michael. Thank you for having me.
Now, why are you doing so great? Is it because of messages like this in the chat?
I don't know. What do they write? That was great. Thanks for the fun. I needed a cigarette after that one. Yeah, we had a great day yesterday. Trading Nvidia earnings after hours. Shorted the snot out of it to the lows and went long and caught, I don't know, 14, 15 point move. It was absolutely bonkers. Absolutely bonkers. Nvidia was priced for perfection, and they pulled it off. I mean, it was just a wild thing to see. You know, I was skeptical that they were going to be able to pull it off, but they certainly did. They came in with revenue above expectations, 96 billion. I think the expectation was 89 or 90. EPS came in at 222 versus 209. And the data center revenue, they blew out of the water, 117% year over year increase. I mean, just it was like the red wedding of earnings reports, but in a good way. I mean, total insanity. On top of that, they projected 108 billion in quarter three revenue guidance, and fiscal 2026 outlook was out of control. They said they forecasted roughly 70% revenue growth in the next fiscal year. The Jensen train is not stopping. Gross margin is 75%. I mean, how do you run a company that large with that many moving pieces at 75% margin? That's absolutely insane.
Okay, yeah, I think the big story was the guidance, because when I saw it on Twitter, I was like, 70%, is that a typo?
Right?
And
Yeah.
that was 70% with constraints. So maybe it could be 90 or 100% if they could get their hands on enough memory. So like, were you in shock from that guidance?
Uh, I was very impressed. I was very impressed that they were able to pull off an earnings report like this, and it doesn't look like it's stopping, and it confirms that the demand for semiconductors is completely out of control, and the quote unquote bubble isn't stopping anytime soon.
Okay, but do you think this kind of brings the thrill back to NVIDIA? So I'm seeing this is the biggest revenue upside surprise since in 9 quarters. This looks like
Mm-hmm.
it'll be their first update. The stock has fallen after earnings 4 straight times. Like,
Uh,
do you feel like this kind of brings the thrill back? Because
Five out of 6 times it's fallen after earnings. You're right. It's
yeah,
crazy.
but do you think like the thrill is back? This is a stock people can get excited about again.
I don't know. As far as trading is concerned, it's like I feel like when I trade Nvidia, I might as well be trading Wells Fargo. The ATR isn't that large, and it trades in ranges until it finally has this one breakout moment, and then it breaks out, and then it's going to trade in a range for another 6 months. But you have to be there for those moments where it breaks out because they're fantastic.
So do you think it's like a better stock to just kind of like buy it and put away? Because I mean,
I
if
mean,
you if you can trade wild stock, like let's say Micron and SanDisk and LITE and that whole crew, like I mean, for active trading, it seems like those other names would make more sense. Correct?
Yeah, I mean, SNDK, Micron, and LIT, those are my daily drivers. You know what I mean? Like that's where I make my money every day. But Nvidia, Nvidia has become an indicator as much as a Momo stock, and obviously a key component of the Nasdaq and the S&P 500 as well. Right? It's an Nvidia earnings are a big indicator the market looks for, especially and the AI complex as to whether we're seeing waning demand, shrinking margins, um, you know, or the specter of some kind of credit bubble, private credit bubble that everyone's so concerned about. So they've checked all the boxes, man. We're good to go. The circus continues, Kamal.
It's this is I swear to I mean I remember like 2 or 3 years ago having this conversation and I was thinking I feel like we're in like the sixth, maybe seventh inning of this. Because with Nvidia, it's like companies this big should not be growing this fast. Like it's absurd. Yet
I
the
mean,
stock, but yet you're comparing it to Wells Fargo.
it's not a great Momo mover, right? It doesn't like. What's the ATR daily ATR in Nvidia, for example? It's a $200 stock that moves, I think, $7 a day. The ATR is 710. It's I'd rather take my $150 moves in SNDK any day. That being said, it moves well. Intraday, it moves well. And the problem is when nothing's happening with Nvidia, if you're trading Nvidia, you're basically trading the Qs, right? So you have to wait for really volatile moments with a strong catalyst, and then it's a joy to trade.
Okay, all right. In terms of where you think Nvidia is going now, in like around February, you said it's going at 258. Right now, it is at 225.31. Is 300 in the cards this year?
Um, this year, so
And of course, you're welcome to pull up charts if you want. And let us know in the chat. Are you guys trading Nvidia? Like, where do you guys think it's going?
yeah, let me pull up a chart here so we can make some sense of Nvidia. It has not been a pretty chart. Like the chart itself is not inspiring, but it's relatively clear to me what it's doing. So Nvidia had a very strong markup from May of 25 here to right here to August of 25. And then we basically went sideways. We tested the upper trend line in November of 2025 and then had basically a selling climax and a base that went from 2025 to the shakeout in March of 2026, right? And then we had our big secondary markup here. So what it looks like to me is that based on the length of this based on the length of this space, if I extrapolate the measured move, it's a 258 by by late September, maybe early October, and by December, January, we're going to be looking at 290, $300.
That works for me.
It looks
Okay.
pretty good.
Okay. Now, in terms of other names in the space, so immediately, so one of the thoughts I had last night, and let me know if this makes any sense. So, Nvidia is saying we're going to grow at 70%, but we grow even faster if we could get our hands on some memory. So, do you think like the memory names might be the chosen ones again?
Yeah, I don't think the crazy train on memories ending anytime soon. I mean, this morning you're seeing a really wild rotation from all the memory stocks. SNDK, Micron, STX. You're seeing Broadcom. Well, Broadcom's the semiconductor. WDC. They're all weak. The optoelectronics names, your GLWs, your LITs also showing some weakness, and I think a lot of that has to do with the crazy software rotation we're seeing today. I'm sharing again. I just want to show you
Yep,
the
sure.
heat map of the market. Basically, in consumer discretionary, you have one green name that's a Tesla, right? And then you have a few semiconductors that are green here, and then it's all software. Everything else is red. So it looks to me like they're paying Peter to pay Paul today, and Paul, of course, is Jensen Huang. We're buying Nvidia, we're buying semiconductors, and and they're selling everything else. So it's a pretty wild rotation, and it's been like that all year. Usually in the secular bull markets, rotations can last weeks or months, and it's in this market, it's a 48 hour. It's a 48 hour type of thing. So it's a violent set of rotations. It doesn't make the swing trading super easy, right? But the intraday opportunities are incredible.
Okay, now, so you brought up software. So we're seeing Salesforce, ServiceNow, CrowdStrike, all
Hmm.
the security names. They're all flying. Like, do you believe in software comeback?
Yeah, I mean, I don't think software went anywhere. I think the market grotesquely discounted pricing of technology titans like CRM, assuming they wouldn't be able to adjust their licensing models and their strategies, which is a horrific assumption. Betting against Mark Benioff like that, and they were, the market was horrifically wrong. CRM has not only changed their licensing model around uh, on a more like per use basis if that's what you want to do, but also now integrated with Claude. You know, I don't know why people assumed, for example, that just because a bunch of kids in their garage had access to ultra powerful Anthropic style tools, that a mega giant like CRM with a million times the resources wouldn't be doing exactly the same thing with extrapolated results that are a million times stronger. So now you have a completely new type of Salesforce coming out that leverages a cloud agent across the entire platform. And having been a Salesforce user for over 20 years, I can tell you that completely changes the game for the efficacy and power of Salesforce. So the stock is being rewarded handsomely today, and I believe it'll continue to go higher. I told my room when nobody wanted to touch this thing back in July. I said I'm adding this aggressively to my long term portfolio. I said I cannot believe Salesforce is trading at $150. This is panic and ridiculousness at work. And I said the same thing of SNOW, which also, you know, had a selling climax in late March, and NOW, uh, MNDY. All of these are just now, MNDY is a laggard, but we finally went long MNDY today in our swing room, and these stocks have been very unreasonably battered. The discounts on their valuations have been grotesque.
Yeah, I
Yeah.
think a lot of people out there don't know what it's like to actually use and pay for enterprise software.
Yes.
Like if it is just like switching software is such an absolute nightmare. It is, and imagine like if I went to T3 and said, "Oh, I vibe coded our CRM, we could save $100,000 a year." That would that could be the worst mistake of my life
Yeah.
because then you
Imagine it. Yeah. Imagine going to the CIO of Caterpillar and saying, "All right, this $25 million we just spent on SAP for our ERP. Uh, Larry from IT just coded an ERP over the weekend. Let's go with that." I mean, it's
yeah,
so
and if
preposterous.
if it goes down on 3 in the morning on Sunday, just text him, and he can go
Just
back
call Larry.
and he can go to Claude and say, "How do I fix this? What went wrong?" It's
I mean, it's so
you
stupid. I mean,
you have to be a masochist to like actually make any software if you're the one that has to manage it.
for sure. I mean, obviously, the other major concern, which is real, is the technology moat the companies are able to build for themselves. Meaning, obviously, not every competitor is going to be three guys out of their garage. You could have startups that greatly increase their coding efficacy and their speed to market by leveraging these tools, which were not available a few years ago, and that does give them an immense competitive advantage. But you have to weigh that against the resources these companies have, their everlasting thirst for innovation, and you can't discount how good these people are at doing what they're doing. There's a reason Mark Benioff is in charge of Salesforce. These are highly capable people who are incredibly resourceful and are going to leverage the same advantages everyone else will. Which is why I think, yes, there are some companies that I think may be in bigger trouble than others. Like, for example, Adobe. Okay, no one's super invested in Adobe. I mean, very few companies are, right? If there's other PDF or editing tools, I think it's an easier switch. But when it comes to companies that are so heavily ingrained in the process management, communications, and customer service management of really large corporations, the amount of institutional inertia there is very difficult to overcome. The value proposition has to be gargantuan. You know what I'm saying? And it's still, and even if it is, it's still fraught with risk, right? So I don't, and I've been pounding the table about this in my room for months, going, this is absolutely ridiculous. But it is. I guess it is what it is.
Yeah, it's kind of the old, there used to be an adage, you couldn't get into trouble for buying IBM. So
I've heard
like,
that many times.
yeah, because like if you pick out, or God forbid you're Larry from IT and you're like, bro, I got this. We're going to save $10 million a year until it goes down, or it rings up $50 million in credit card charges over the weekend that weren't authorized. Yeah, I don't know. That's one thing I cannot wait for, is to start hearing the horror stories of vibe coded software.
It's especially the security nightmares. It's real.
Oh yeah. Okay, so I noticed in the Sultan's room you were buying FIG today, Figma, and Monday. Since we're on the topic of software, I figure we might as well discuss those. So what did you see in these? Now Figma looks kind of beautiful to me. So what do you see here?
Yeah, so Figma had it's a chart Richard Wyckoff would be proud of. There's nothing about this chart I don't like. You have a last point of supply here, a pivot, a W bottom here, with very strong volume on every up move. Okay, these are typical signs of institutional accumulation over multiple months, and then a strong neckline break, and we finally took out the 200-day and the anchored VWAP. So we're dollar cost average positive now, and the squeeze is on. So I see this as a transitional setup for a much higher move, mid 50s, 60s, maybe 80s. Figma looks tremendous. It's acting beautifully today, and I think it has a tremendous amount of legs here. And if you look at a lot of these stocks in the IGV, they all look the same. So it's Figma's turn now, and I think it's going to do great. Same thing with Monday.com. It's a absolutely gorgeous chart. Multiple months of accumulation here as well. I've been a user of this software for many years, and I could not believe the level of beatdown in this chart. So you have a massive selling climax here post earnings, a shakeout, an attempt to break out here. Basically a good old sign of strength. But when it came in, notice here your most traded volume became the bottom of this pivot right there, which told me that the auction was no longer willing to revisit these lows. So after this little two-wave corrective, we formed a tight little base here, and today we're squeezing over the 200-day. This is a massive transitional setup, and if you look at the transactional volume here on the left, okay, you don't have a lot of overhead supply to the 145, 150 handle. So we're looking for a 30-40% move here. It looks fantastic.
Okay, all right. Since we're on the topic of software, I have to ask you about Oracle. Now,
Yeah.
I mean, it's like I don't know what to make of it. It's just utter craziness. So, what do you think of Oracle?
I think the market fears that obviously, Oracle is a fantastic American company we should all be proud of. Larry Ellison's genius shines in all their products. The problem obviously has been their the fears of circular financing and credit defaults, which has been plaguing the company. They have massive data center commitments, and the market is uh, deeply afraid they're not going to be able to fulfill that OpenAI is not going to be able to fulfill their financing commitments to them, and so you're seeing a stock that's unfairly and deeply depressed in terms of value. This is a fantastic company, and I've bought a lot of Oracle in every dip for my long term portfolio. The fact that this thing isn't trading at $250, $300 a share to me is grotesque, absolutely grotesque. So yeah, I've loaded up in the long term portfolio, and I expect the next couple of years for Oracle to really shine. The risk, obviously, the upside risk is some kind of credit default, but I don't think that's going to happen. Also, I think that the thing that people aren't really thinking about is that uh, these data centers are relatively easy to retool for a variety of other companies. If you look at what SpaceX did with, I believe, Anthropic, right? They had all this spare data center space, and they made a deal with them, and it's already getting deployed. So I think having power and having data center space is going to become a currency unto itself in the next 5 years, and Oracle is doing the things it has to do to make the build outs happen.
All right, JR, let me float a theory by you. So, like, I've been thinking about the banks as possible AI plays, especially like Morgan Stanley and Goldman Sachs, because they're at the center of a lot of this deal making. And it's like
Hmm.
everybody's raising crap tons of capital. Nvidia's getting into the financing game big time, and the banks have their paws in all of this stuff. So what do you think of like Morgan Stanley and Goldman Sachs as sort of like ancillary plays on AI?
I think that's probably a good way to look at it. I think some of the smaller banks like Citizens and Carnegie Mellon have a lot of private credit exposure, underwriting all these private equity deals. And if some of those start to go south, you're going to see another banking crisis for the more regional, boutique, more specialized banks that deal with that world. But I think the future looks very bright for the big banks for sure.
Okay, are you looking forward to any of the big reports tonight? We have Marvell, Autodesk, Workday is tonight, Affirm, Ulta. Like I guess like Marvel's the
I
one for you.
think Marvell is the one for me. We bought this one for the long term portfolio back in March of this year at $73. I told my people this is grotesquely underpriced. They're going to be the gateway drug for a lot of these Mag 7s to peel away from Nvidia. And if you're long Nvidia, Marvell is an excellent hedge um, against a potential moat breakdown of Nvidia. As you know, Nvidia's biggest clients are all the Mac Sevens, right? And as they peel away and start to innovate their own GPU and TPU architectures, they're going to be going to companies like Marvell to facilitate that. And you can see the kind of move Marvell's had from March of 2026 to present day, and I think it's only going to keep going higher. So um, I think Marvell, I'm sure, will have really good news in terms of partnerships, guidance, and innovation. And I think it's going to be a tremendous earnings report.
Okay, do you think that those internal GPU builds, like for example, OpenAI, they just released their Jalapeno. They're claiming, according to benchmarks, that it beats NVIDIA's chips. But do you think NVIDIA is really threatened by Google and Amazon and all these other companies like making their own chips in house?
To a certain extent, tearing away from NVIDIA is not a monolithic thing. You're going to be doing it in certain parts of your data center for specific workloads. But as time progresses, NVIDIA is going to have to fight very hard to keep that moat intact. The value add they're going to have to bring to the table with Vera Rubin, and the next gen is going to be very high, and they're doing that. It's a fully integrated AI processing stack that's incredibly impressive, and large companies are going to have to do a very careful calculus as to the not only viability but the cost benefit analysis of tearing away from that.
Yeah, I guess it's the same like software. Like, who wants to be the guy that says, "All right, no more Nvidia," and then the
Mhm.
data center goes to crap? So who knows?
Yeah, and there's so much growth to be had for Nvidia outside of competitive spaces where you just need raw workloads done, and TPUs may reign supreme in one place, or they may go with AMD, etc. But I believe a lot of these environments are going to be hybrid. So this monolithic thinking by a lot of analysts, I believe, is just kind of deeply flawed.
Poor analysts can't catch a break. Okay. All right.
You know,
Okay.
they say those who can't trade become analysts.
And those who can't analyze become traders.
Uh, that's also probably true because most traders I know are just chart Neanderthals. We do well, but most traders don't really care about fundamentals very much that I know, and they're
Yeah, I
important.
mean, listen, I've seen cases from very very successful traders where because they're literally just living by tickers, and they might think one company is another and not even know the difference. But
If you want to catch enormous moves in the market, 2, 3, 4, 500% moves in the market, you have to have a cyclical understanding of the economy, of macroeconomic headwinds. You have to have a cyclical understanding of the product the stock you're buying represents, and you have to have a really good understanding of the fundamentals, the macroeconomic and microeconomic fundamentals of the particular of the particular um, sector that you're buying. Like, if you have a good understanding that, like Marvell and the wafer makers, what do you, the guys in Hollywood, what's their name? The guys that make all the wafers,
um,
ASML. Um, if you have a really good understanding that these are going to be the people selling the picks and shovels in a specific mega trend, such as development of more economic TPU and GPU architectures, and there's sort of an inevitable trend in that particular sector, you have a huge edge over technical traders saying, "Okay, I'm going to buy this cup and handle." You know what I mean?
yeah. Okay.
So
Okay. Do you have any views on the broader markets from here?
I think we're going to have a very, very volatile September. I think a lot of that is going to depend on the resolution of the Ukraine and Iran conflicts. I think a lot of that is going to depend on whether we're able to sidestep another dollar yen freak out and carry over trade freak out. And I think Warsh and what's his name, Besant, are going to have to figure out a way to extinguish the five alarm fire that is currently the long end of the curve, which is getting away from them fast. So it's a tall order, man. I do not envy central bankers right now. I'll tell you that much. They got a very tall order. You've got inflationary headwinds that are not easing at all, and a job market that continues to surprise to the upside. Earnings were a complete blast off, right? And you've got these very stubborn inflationary prints. So we've gone from toward the end of the Biden administration, a total freak out about a stagflationary environment, and now we're concerned about a Fed that can't control runaway inflation, and that could also be very, very problematic, especially when the Fed can't do much about the 30-year bond, and that's that's the bond market calling BS on the Fed, And you go as a trader, you really have to pay attention to the bond market. It's much bigger and more important than the stock market, and the bond market is raising a giant red flag here. So, this is I fondly remember 2009 to like 2022. Those years, you didn't have to think much. You could just trade the chart. Everything turned it higher. We had a couple of dips here and there, and now you really have to trade with your head on a swivel. The markets have become more complex. The economic challenges have become more complex, and because of the incredible transformation period we're going through right now, where literally um, the core of the means of production and the input costs of our economy are changing so drastically and dramatically. We're recalculating the value of everything while dealing with a lot of inflationary and geopolitical challenges all at once, and it creates a very, very volatile market. The opportunities every day are insane. I mean, as a day trader, I'm happier than the pig in mud. As an American investor, I get concerned here and there.
Could you imagine being a central banker? Like,
Oh my god, no thanks. I am good, dog. I am good.
yeah,
So many variables.
yeah, and it's so interesting because like we have all this technology, all these tools, yet it feels like it's becoming harder to predict what's coming next, not easier.
The volatility is insane. We've got like certain like technical themes in the market. Like, okay, is this one of those days where SNDK gaps up 50 points and runs 150 points, or one of those days where it's gapping down 30 and runs 220, or it's just crazy. It's totally insane. And the market seems despite, like, I feel like sometimes markets should know better, but we react like a 5-year-old on Adderall every time. These are very emotional markets that are easily driven by news. So you've got to be really careful with the tape bombs. Our president is very vocal uh, on Twitter, and what's the other one? The
Truth Social.
Yeah, and he's a bit of a bullet of China shop. Not making a political statement here, but he's not known for being artful and delicate in his statements, and that certainly is throwing a little bit of high octane gasoline on the already raging fire. So I love the volatility. I absolutely love it. But this is we're at the deep end of the pool now, and that has its benefits because you can dive to head first and not crack your skull. But it requires a lot more ability to navigate these markets than it previously did, which I love, right? Because the cream rises to the top. Professionals do really well in this market. I can't imagine being a beginner trader in a market like this. You would just be so unprepared to deal with the rigors and the nuances and the abject crazy volatility we're seeing every day. And I do not envy beginners at this point.
Yeah, I don't know how the hell you guys do it because like I get sick just reading the news.
I
Like
mean,
I make like one trade a month maybe,
oh my
and
God,
and I try to never sell anything. So just like coming in every day and seeing like this wall of headlines, Trump said this and oil's doing this and Iran's doing this, and it's just like, oh Jesus, just like turn this shit off. Like give us like a week off,
Oh, there's a lot of Trump and Iran fatigue for sure. This has been a very contentious administration. Again, I'm not making political comments, but this has not been, the Carter or Biden administration where basically nothing happens for 4 years. It's been, one crazy thing after another. So I'm very happy with the way the markets are behaving. It works to my advantage, but I got to tell you, I don't envy beginner traders, and I certainly don't envy the central bankers. This kind of volatility has been totally wild.
Okay, all right. Okay, guys, we have our huge summer sale going on. And JR, of course, always we love your analysis. Everybody in the chat say thank you to JR for sharing. I know that this is the day after Nvidia is always busy, so definitely appreciate JR coming on. So it is summer sale time. If you go to t3live.com/summer, you can save on JR's room. So JR, we just want to kind of give people a rundown of your rooms. And before everybody asks, all of them are accessible via mobile app. People keep asking this, even if we put it in giant letters on the page. Everything is accessible via the app. So JR has 3 rooms. A lot of you guys know Momentum Express, but he has 2 others. But JR, Momentum Express is day trading. There's pre-market pit. If you for the nut jobs that want to get up at 6 a.m. in the morning and really go gunslinging, pre-market pit is amazing. And then there's Sultans of Swing trading. So let's kind of go through them quickly, JR. So Momentum Express,
Yes,
what's
sir.
this all about? What are you nut jobs doing in here?
A lot. So Momentum Express is our flagship room. We're trading futures, primarily index futures. We're trading equities. We're trading. A lot of our guys are trading options full time. We provide top tier market analysis, and I'd say we come up with probably 30 to 60 trade ideas every day. Some are, we cater to everyone. We have 10, 15, 20-minute scalps. We have day trades where you can, be in a trade all day long and just watch it go. We have some swings in there too, Uh, so it's a little bit of everything for everyone, but it's primarily day trading. So anywhere from if you're a 2 to 5 minute scalper, between me and my other co-moderators, we've got 5 moderators in there. A lot of people. We'll probably be throwing at least 20, 30 scalp ideas alone every day. And then, we like to also give people who like to hold longer the opportunity to take trades that are, they're going to be holding the whole day. And then we trade the sequences. Like we'll take a trade and hold it for 3, 4, or 5 days as well. So like a little short-term swing. And that's really the focus of the room. A lot of market analysis, a lot of news flow. We've got 18 different news feeds coming in. So we're listening to news every day and providing, what I consider pretty sophisticated intermarket analysis in the sense that we're watching interest rates, we're watching the dollar index, we're watching the futures, we're watching sectors very carefully, providing market breadth updates. And the idea is to give people a very complete room that gives them, first of all, a top-down view of markets instead of just, focusing on 1 or 2 runners or a day. We're giving people a very broad view of the market, analyzing sectors and the overall market so that people can make informed decisions and trade according to their style. It's not just an alerting room. I mean, we alert a lot of trade ideas, but the main theme of our room is to empower traders to not only trade their own style, but trade the strength they wish to trade. Obviously, we always encourage people to trade things that are in play, right? And so we go over the things that are in play, and sometimes it's airlines, and sometimes it's, maybe the TLT is ripping higher. So oftentimes it's the AI complex. Sometimes it's the transports. Basically, what we're there to do is to find opportunities and provide our analysis in terms of how we think those should be traded.
Yeah, and our friend Darth Theta, who I believe was just named the Sith Lord, said, we have fun too. There's a lot of laughs.
There's a lot of laughs. Yes.
JR gets a little unprofessional sometimes, and the language could get a little colorful. So if you're a little shy and afraid of some fireworks, it is not the place for you. But it is
piracy at the high seas. We got a lot of
it's a lot of
sailors in the room.
it is a lot of fun. I will say this: it is a lot of fun. Most trading rooms are not T3s. Our trading rooms are fun. Most trading rooms in this industry are freaking terrible. Like if you have insomnia, join a trading room, you'll be fine. Okay.
Well, our traders log in at 9, and most of them are there till 4, and that's because it's a community. A lot of ideas are shared, and people have fun. So having fun is important.
Absolutely. Barack says, F that, the room is great. And this could be Barack Obama, but I'm not sure. We can neither confirm nor deny that he's a member of the room. Okay, let's talk about pre-market pit. So this is for you freaks like me that love to wake up really, really early in the morning. So JR, what is going on in pre-market pit early in the morning?
So we noticed two trends. No one's really prepared in the morning by the time we do our morning call at 9. And we wanted to have a completely transparent workshop style market preparation room where all we do is talk about the news, build one central document that tells people, what the main headlines are and what the watch lists are with levels, and then also capture a lot of these insane trading opportunities that we're seeing every day in the pre-market. There's a lot more retail traders on. There's a lot of crazy low flow names, and every day we're looking at pre-market opportunities and absolutely smashing them over the head. And like for example, gas today. I don't know if you can let me share my chart again.
Sure.
So we have opportunities that look like this every day. Just absolutely explode higher, giving you 30, 40, 50, 60% moves. One that my pre-market moderator called out, he's been stalking it all morning, and when it finally broke out today, that's my main man Rafael El Sicario, one of my moderators. He was literally watching this thing like a hawk all morning, and called the wedge break here at 120. And I literally traded this thing with him till 220, and then I had to come on live with you. I was literally late because I was closing out this trade, and that was almost 100% mover in 20, 30 minutes. So we're catching a lot of these off the open and in the pre-market, and it's a good time. But the primary thing I wanted to give people is the experience of watching three professionals actually prep for the market. One of the skills that like a lot of people in trading education, they focus on, okay, here's what a good chart setup looks like. Here's how a good a good strategy looks like. Here's how I do money management. If you're lucky, you're going to get money management. But nobody ever really shares their step-by-step preparation in detail. You know what I mean? So what we wanted to do was give people a backstage pass to how we prepare for the markets in the morning, and then how we trade the pre-market movers. And so it's a deeply educational environment. And when we're in pre-market trades, I try to share the tape and talk about what I'm doing. And so if you like really fast trades in the morning, a lot of our guys, by the time 8:00 hits, they're done for the day already. So it's a really fun environment as well. We got 3 guys on the mic. It's really fun.
Yeah, if you want to make money early, pre-market pit is amazing. Okay, now we're going to close out in just a couple minutes. So, Sultans of Swing Trading. I know probably a lot of you guys in this chat. Let me know in the chat if any of you are members of Sultans of Swing Trading. So, Joe, we talked about earlier before, JR, how you got Monday and Figma. So that's the kind of analysis JR gives every day in Sultans. So JR, so what's been going on in Sultans?
What's been going on in Sultans is we're catching some really, really nice moves. We're building a portfolio. If you look like an IBD swing trader, they haven't even beaten the S&P 500 index yet this year. And we're just hammering big winners. We're keeping our losers tight, 5-6% tops. We don't sell anything until we hit at least 20-25%. Like right now, ANDG, for example. Can I share the chart?
Sure.
ANDG, we trimmed a little bit at 20%. We trimmed a little bit at this is a chart we went long here at around $40. We're up 35% of the trade. We're going to have our next sale at 40% coming up here shortly. around $57, and we're looking for approximately a 50-60% gain past 62. So the strategy here is to find stocks that are more or less impermeable to the craziness of the market, just showing incredible relative strength, and we just step on those and really ensure that we're catching trends that are really not going to be foiled by the vicissitudes of the market. So when a trade fails, and obviously everybody has losers, right? We cut them off around 4, 5, 6%, and then we let our winners run. We don't take profits, so we're at 20, 30%, and we just squeeze those higher and higher. And that's really the name of the game with swing trading. Swing trading is how you grow big money in accounts, how you create a lot of wealth as you let trades work for very, very big percentage gains, and you just keep compounding and compounding and compounding. And in my swing trade account, I'm up right now. We're up about 70% for the year. Beating most of the competition and really outsmarting a lot of the other players in the business. So I'm really pleased with that. We're an Amgen, another gorgeous winner here. Absolutely beautiful base breakout through 401. We're in Arrow. We thought that we're going to see a lot of strength in copper, and look at this beautiful multi-month base breakout through $32. We're looking for 42 and 50. Just a beautiful moves that, in my opinion, are going to be more likely than not to work, because their strength there outside. There's uncorrelated strength to the indices. So even when the indices come in hard, these strengths show a lot of these stocks show a lot of relative strength, and that's really been our strategy this year, because it is so easy. Say you're long AMD or Facebook or Apple. It's so easy for those to pull back if the indices pull back because they're so highly correlated. So for the market environment we're in right now, we've had to really change our approach and focus on names that are just, dancing to the beat of their own drum, and or marching rather, and that's worked out really, really well.
Okay, awesome. So guys, what did you think of all the analysis JR gave you today? So he broke down Nvidia, Micron, SanDisk, Figma, Monday, Marvell, a whole bunch of others. What do you guys think? Let me know in the chat. And if you liked what you saw, you can go to see our summer sale. You can save on some of JR services. Is that an ice bucket?
Oh yeah, I keep a cooler right next to my desk. Check it out. I have a war chest of kombucha and beer right here.
Oh, kombucha.
Oh yeah, bro. Hum kombucha. I should be sponsored by these people. I drink so much of it. Passion fruit, tangerine is the way to go right here.
It's good for gut health, I hear.
Yeah, what the kombucha does, the Heineken does. It's my yin and yang.
Yeah, so technically, I'm not a doctor, but I'm pretty sure that for every beer you drink, you have one kombucha, and it's like it never happened.
It never happened, bro.
It's like a time machine in a bottle. Okay, guys, again, t3live.com/summer. If you have any questions, email amber@t3live.com. Put JR sent me in the subject line, and she could help you figure out what makes sense for you. Again, t3live.com/summer, t3live.com/summer, and email amber@t3live if you have any questions. JR, thank you, as always.
Captain, thank you very much. Great to see you.
You hear that? I'm the captain.
You are the captain.
So you people out there, but you better show me more respect. All right, everybody have a wonderful day. Good luck out there.